This is Phillip Streible with R.J.O. Futures coming to you from the floor of the CME Group. Looking at the metals markets here today, the gold market specifically gave up a large portion of its gains from yesterday. Now remember that it gained so much momentum after breaking through a couple key levels of resistance. That 1320 was an area of resistance for quite a while. We shot up into about the 1340s. Today we were backing off most of the day, and really it was just guys kind of taking profits, reassessing. You're going to have a couple different Fed speakers out this week, and they may question whether or not they may institute that taper come September. Now, the reason for that big move up there was China. Their import of this material, of gold material, had surged drastically in the first half of the year. So gold imports were up just massively over there. It looks like in a few years, China may potentially take out India as the world's largest gold consumer. So silver, on the other hand, that remained firm most of the day. It was in positive territory. I was traveling up like 15, 20 cents. It started to back off a little bit, went negative once or twice, but it really held quite firm, and it looks really nice on the chart pattern. Now, if you look at that gold-silver ratio, that's got to start to come back together because we're at historically wide levels. So I anticipate silver prices still to hold firm. I think $20 is now kind of your line in the sand. Below there is a little too cheap. Above there is starting to price itself right. I think 23, 4, 5, 6 right around the corner, especially towards the end of the year and into the beginning after we've digested any kind of Fed tapering. You've got platinum and palladium also remaining quite firm. A lot of problems down in South Africa with their mining. The prices have come down too much. You saw some labor disputes start to occur. A lot of the mines, they started to shut down or curb some of their production. That's going to cause supply-demand problems going in the next several months out. Also in Europe, their automotive sales and their automotive demand has been picking up quite nicely. That's what the main driver for that palladium has been. And then copper, on the other hand, that's been kind of wishy-washy. You get some good data out of China one day, copper right up, then the next day you start getting some slack data, or you get some weakness in the Shanghai or in the Nikkei, and you start to see copper prices come down. Remember, copper hit by a large supply, quite a bit out there. The demand, not so great. I mean, the only way you're going to get massive demand on there is through the housing, through industrial numbers, always looking at industrial production, manufacturing data, whether to get your gauge on the copper or not. Anything below like that $3, that $2.90 level, those are key levels of support. We start getting back up 320, 330. Those are areas of resistance on the copper market. So remember that futures and option trading does involve risk of loss. My name is Phillip Streible. My number is 1-800-438-4805. I'm coming to you from the floor of the CME Group with R.J.O. Futures. Good luck and good trading.